I'm Sam Slator from FundCalibre. I'm here today with Nick Martin, manager of elite-rated Polar Capital Global Insurance Fund. Hi, Nick.
Hi, nice to see you.
Most of your stocks are based in the US. Why is that? Is it that because there's more of a litigation culture out there?
No, I wouldn't say that necessarily, but that certainly is probably true. What we tend to find over the years is the best underwritten businesses tend to be in the US. So our focus in the fund is more on the small to mid-sized companies rather than the big conglomerates. So typically in Europe, you find some of the big multinational, multi-class companies where we try and find specialist businesses. So in the US, there's plenty of those to have, and they also think about per share value creation in the way that they run their businesses, rather than what you often see in many other markets is people trying to actually build empires and plant flags. And the final thing I would say is the disclosure in the US is always very good, particularly around reserving, and that's a very important part of assessing any insurance company, is looking at the adequacy of reserves, and the disclosure in the US, not only from a stock market point of view but also regulatory, really is helpful to our investment process there.
We hear a lot from other asset managers about the growing middle classes in Asia and how that could be a benefit for insurance companies with more people taking out insurance. Are you finding that as well?
Yeah, I mean, the case for growth in Asia is indisputable. You see the population statistics. As people come into the towns, and they have urbanisation, which is causing significant increase in demand in insurance. So the growth opportunity is certainly there. The thing that we find a little bit more challenging is can you really find profitable growth? And I think that's always been an important part of our process, is finding companies where the majority of their earnings come from underwriting, so taking more in premiums than paying out claims, and having relatively low risk in terms of their investment returns. The trouble you sometimes find in Asia is that underwriting margins are very skinny, in some cases non-existent. So therefore, a company's earnings are largely dependent on what they do in investment markets. Now, I'm not a macro hedge fund manager guy. I'm a dull and boring insurance person. So I don't think we really have any edge when it comes to looking at some of those companies. So for us, it is very interesting. We look very hard, but probably less than 5% of our portfolio is invested in the region, which is significantly below what you might expect.
Thank you very much. That was really interesting. Thank you.
Thanks very much.
If you want to learn more about the Polar Capital Global Insurance Fund, please go to fundcalibre.com.